Hey now, I'm back with another trading strategy review. In this installment, I will be testing the profitable triple EMA strategy from the Trade Prime channel to see how it performs over a series of 100 consecutive trades. Make sure you stick around to the end where I share my 5 optimization tips to make it even better. And if you want to see more content like this, then hit that subscribe button just like... I call this system the Easy 3, and it uses 3 free TradingView indicators. As always, links and settings to all indicators are listed in the description below. The first indicator is the 200 exponential moving average. The length will be set to 200 and the color set to white. In this strategy, the 200 EMA is going to provide a place of dynamic support and resistance. The second free TradingView indicator is the 20 exponential moving average. The length is set to 20. This study will assist in determining the short-term trend direction. The final study to add to the chart is the 9 exponential moving average. The length will be set to 9 and the line will be colored blue. The 9 EMA will work with the 20 EMA to confirm short-term trend direction. Let's go over entry criteria and review some examples. As always, system rules and details are listed in the description below. This chart is Bitcoin versus the US dollar, 1 hour candles. The rules to enter along on the Easy 3 are: first, price must close above the 200 EMA in white. Second, the pullback must cause the 20 EMA in orange to be over the 9 EMA in blue. Third, price must close below the 200 EMA during the pullback. Finally, price must close back above the 200 EMA in white and break the upper trend line of the pullback. All of that happens on this candle here. That is our trigger candle. We place our stop at the lowest price level below the 200 EMA and target 1 to 1.5. And this one hits our target. If you enjoy this content, please make sure to hit that like button. I have one more long example. Price must be above the 200 EMA. Next, we are looking for a candle to close below the 200 EMA. Third, the 20 EMA must be over the 9 EMA on the pullback. Finally, price must break the trend line of the pullback and close above the 200 EMA. Everything converges on this candle and it serves as our trigger. The stop is placed at the lowest level of the pullback below the 200 EMA and target 1 to 1.5. And this one hits the profit target. Now we flip to shorts. This is what I will test for shorts. First, price must close below the 200 EMA in white. Second, the pullback must cause the 20 EMA to be under the 9 EMA. Third, price must close above the 200 EMA during the pullback. Finally, price must close back below the 200 EMA and break the lower trend line of the pullback. All of that happens on this candle here. That is our trigger candle. The stop is placed at the highest level above the 200 EMA and the target is 1 to 1.5. And this setup winds up hitting 1.5. I'm going to show you one more quick short example. First, price is trading below the 200 EMA. The 20 EMA is under the 9 EMA during the pullback. Price must close above the 200 EMA. Next, price closes below the 200 EMA and the trend line is broken. This is our trigger candle. The stop is placed at the highest price above the 200 EMA and the target is 1 to 1.5. And this one hits our target. I'm going to give you some phenomenal ideas on how we can make this system even better along with a trader's landing score. And now it's time to do what I do. If you enjoy this content, hit that like button. Remember, this is just 100 tests on one instrument. This is a particularly subjective strategy because there is wide varying opinions on how to draw trend lines. That being said, take these results with less veracity than most. This test was done on Bitcoin versus the US dollar 1 hour candles. It took a little more than 19 months to find the 100 trades. Most wins in a row turned out to be 6 and most losses were 4, which is pretty good. This dataset produced a win rate of 55% and the gain on account was 38%, risking 1% per trade using a 1 to 1.5 risk to reward. What if instead of using a 1 to 1.5 risk to reward, we used a 1 to 2 risk to reward? Funny you asked. Using a 1 to 2 risk versus reward, the winning percentage went down to 47%, but the gain on the account went up 3.5 points to 41%, which is statistically significant. Stay tuned because I'm going to give you 5 fantastic ideas on how to crank up this strategy. The equity curve here is really very nice. We start out with a very impulsive move up, followed by a pullback, and then the test ends with a steady move north. When looking at the equity curve using the 1 to 2 risk to reward, you can see a lesser impulsive move up to start, but the rest of the balance moves in parallel to the initial results. What score would you give this strategy? Let me know in the comments below. I give this system a Trader's Landing score of 7. Because I could create a 4-hour video on how to optimize this. Remember, the enemy of great is good. I have 5 ideas on how we can improve this system. First, in my opinion, the 9 and 20 EMAs are not used correctly. I would change the rules to only get into the trade when the EMAs move in the direction of your profit target. You can see how it filters out this bad setup and gets you into this good one. Second, this system is just begging to add in divergence or hidden divergence, like I utilized in this video where I went over scalp the hidden V. Look where we have hidden bearish divergence, a lower high on price and a higher high on the RSI. As expected, we get a nice reaction to the downside with that extra confirmation. The next optimization tip is to look for a break of resistance levels. You can see here, there is a break of the resistance level in addition to the system signals. Fourth, and this is even more subjective, but you shouldn't just look at the trend line. You want to trade a pullback channel with more internal movement, not just one large candle that could mean something else. Next, whenever you are looking to trade the end of the channel, there are 2 specific price action patterns you want to see. And I use these patterns in my personal trading. Like in these examples from the test, you will increase your win rate by looking for these ending channel price action formations. Check out this playlist for more profitable systems and have a great day because you deserve it.